Hello everyone. Today we are going to discuss another penny stock named Mangalam Global Enterprise Limited, which is priced at 22 rupees. If we look at the a brief introduction about the company, so the company is in business of manufacturing and trading of edible and non-edible oils. Also, company forayed into other business as well, like cotton business and mustard seed, and also company has entered into B2C market by launching their own brand in Lagnam in the domestic market. So the clientele of the company is the important thing which we stress upon is they have a clientele from ITC, Adani, Godrej Group, DML Group, and these all are the prominent and key players in the FMCG space. So this shows that the company is working efficiently and company has prospects if they continue to give the returns as what they have shown in their balance sheet and financial statements. Looking to the various aspects, so the company is having a revenue breakup of around sale from manufactured product or trading of product, which is around the revenue of the company is totally devoted towards their sales and trading activities, manufacturing and trading activities. Also, company has increased their authorized capital from 50 crore to 104 crore because of their expansions and acquisitions in last few years. If we have seen the market cap of the company is around 327 crore rupees. So the company is having a not company is not even a small cap company, but also see that there is a layer of small cap. In small cap also, in small cap there is a company which is pure small cap, but with a high market cap, like around 4 to 5,000 of market cap. But there is a small cap company which is said to be a micro cap, and there is a company whose market cap is less than micro cap as well. So that company is said to be a nano cap. So this stock is a nano cap stock, which is having much fluctuation. But looking to the market cap, so the market cap is around 327 crore. Current price is around 22.6 crores. The stock P is around 17.5. Looking to the stock PE of peers, so the stock PE of peers are all, as same as what the company is having around 7.46. So they are in par with the company. It means that the company pricing is valued at what it was as compared to the industry. So if we look at the book value, so the book value of the company is 9.63 rupees, which is decent enough. Looking to the dividend, a company which is having a pricing of 22 rupees is also paying dividend. That would be a good checkpoint or plus point for the company like this. So looking to the ROCE and ROE, so the ROE is around 13%, but the ROCE is around 13% and ROE is around 15%. And the EPS of the company is 1.40, which is highest in of the company among last 5 or 6 years of time. Promoters holding are around 75%, which is the peak or the breach upper limit of the promoter can have. So that would be another good point if we look at the pricing pattern. So the pricing pattern in last, I would say, 1 years of time, company has shown some strength and momentum and retained its position from in 220s, between 20 price range of 20 to 23. That shows that the company is currently in the phase of, in last 6 months the company is in phase of consolidation and moving from 20 to 23. But the company has given a return, in decent return in last 6 months to 1 years of time. But the momentum does not shows much in, if we look at the data of 3 years of time, where the company has reached its peak of around 47 rupees or 48 rupees, but currently trading at around 22 rupees. And if we look at the so yeah, the company is having a maximum pricing of around 45 40 I would say 48 rupees, which is in 22, and that is because of the windfall investments that India has been received in that period, and that is post COVID, and India has received too much amount of cash flows and all those things, and that will attributed that every company has increased. Every company has get their market cap or the valuation at its peak. Looking to the sales factor, so the quarterly sales, the company has clocked a quarterly sales of a good growth. If we look at the quarter on quarter basis, so the quarter on quarter basis, they have shown more than 50% or more than 50% of the growth in March 24. If we look at the same quarter in March 23, also the profit margin of the company has increased to the 3% in quarter basis, and the profitability of the company on the quarter basis is around 12 crore, which is the highest any quarter a company used to have. So highest quarterly profit company has clocked in March 24, which is another a good sign. Looking to the Sales, so the sales prospects of the company is also good because the company has achieved a sales turnover of 1839 crores. And if we look at the split of them same, so the sales growth is, as was we have seen that year on year basis, it shows that 30% of sales growth, which is a good. If we look at the various aspects like the operating profit, so the operating profit is around one of the highest. If we look at the 35 crore rupees in last 6 years, it is the highest, and it is consistently increasing pattern, like 8 crore, then 11, then 12, then 13, then 29, then 35. It shows that the growth as well as the stability in the company. As far as the track record of last 6 years, and operating profit margin is in line with what it was in last 6 years. So operating profit margin shows that there is not much fluctuation in their operating profit margin, and the company is having decent and stable margin. uh, if we look at other factors like net profit, so the company has obviously shown their highest profit in last 6 years of time, and which raised their EPS to more than 1 rupees per share to 1.4 rupees per share. Also looking to the sales growth, so the company is having a sales growth of 36% in last 5 years, and in 3 years 24%, and in 12 months there it is around 30%, which is a good number. So company is not operational in last 10 years, so the data of 10 years is not available. Also, the profit growths are more than the sales growth, which is very good, which shows that the efficiency the company used to have, and company has increased their efficiencies slowly, and that resulted in their profit growth, which is more than their sales growth, which is a good indicator when the profit growth is more than the sales growth. Also looking to the sales CAGR, so the CAGR in last 3 years, company shown some momentum of 32.4%, but in last 1 year, the company does not show much in terms of shareholders or the investors growth. But looking to the return on equity, so return on equity is around more than 10%, 12%. It has been increasing on a year on year basis. Looking to the 5 years data, it is 10%. In 3 years data, it is 12%, and now it's 15%, which shows the company is in growing mode and expansion mode. Looking to the equity capital, so the company has raised equity in the current year as well, and which shows in conversion of warrants in April 18 at 8 rupees, 8.4 rupees, and which shows that 9 rupees they have received approximately to 10 rupees. Okay, so 10 rupees they have received, 10 rupees, 10.4 rupees per share of 56 lakh 25,000 shares. So that is around 5 to 6 crore rupees. Looking to the dividend, so the company is having company is consistently paying their dividend, which shows the commitment of the company. And however, the dividend amount has been reduced from 20 paisa to zero point zero 0.02 paisa, which shows that the company also wants to invest their surplus and reserve and surplus to their business for expansion or any other reasons. But the company is paying their dividend. It shows that the company is committed towards investors as well. And if we look at other factors, so the company other factors look that the reserves are consistently increasing when raised to the 110 crores. And the borrowings, the company is, if we look at the interest payments, if we look to the interest payments, so the one of the reason which raise your eyebrows is the company has consistently paid. The company has paid their interest to 25 crore rupees, which is I think that which is more than the 75% of the company's operating profit, and majority of the operating profit is being taken by the interest payments or finance costs, which will be an issue, and that will be seen from the short-term borrowings that the company is having 222 crores of borrowings. But that there is one plus point that the company has reduced it substantially to more than 70 crore rupees, and the short-term core borrowings has been reduced to around 164 crore rupees from 222 crores, and the net short-term borrowings have been reduced to 50 crore rupees from 254 crores to 201 crores, which is shows a reduction of 53 crores, which is a good sign that the company is deleveraging themselves. And in next year of time, and in FY25, if we look at the data of other quarter, so it is clearly evident, and it is clearly seems that they see that the interest payments has been 7 crores, that has been reduced to 6 crores, and it is going to be reduced substantially in the next quarter as well. Let's look at that. So that is not a matter of concern. Other things, if we look at the other things, so the liability has been reduced, other liability has also been reduced because the company has paid off their trade receivables from 69 crores to 20 crores, which would be a good signal. But other liability items has is increased substantially to around 60 crore rupees, and but the reason for that is unexplained, or that is not available in the website. So we are not. We will look. We will look it later. Looking to the fixed assets, so the majority of the fixed assets is being attributed by land, building, and plant and machinery, and that stood at around 49 crore rupees. Looking to the other assets, so the company has increased their inventory, and from 69 crores they have increased to 104 crores. The trade receivables of the company has been reduced. It shows that the recoverability of the cash from the trade receivables and the company has received from 210 to reduce it from 210 to 174 crores. The important thing which we have to see is the cash equivalent. So the company is having a cash balance of more than 10 crores in 5 years, last 5 years of time, and currently it is clocking around 14 crores, which is very good thing if we look at the cash flow. And if cash flow is decent enough, so it shows that the ability to pay off their short-term liabilities, which is a good thing for a company. So if we look at the operating activity, then the operating activity, obviously, as we what we have seen, that the company has received from their receivables and the pay piled up their inventory, that is result in reduction in the cash balance, and the company has paid off their payables as well. But other working capital changes, which is not available, data of which not available, so we cannot explain it further. But because of that positivity or surplus, the company is maintaining their cash from operating activity around 40 crore, which is the highest in last 6 years of data, and first time in last 5 years or 4 years of time where the company has shown positivity in the operating activity, cash operating activity, which is a good sign. So the cash from investment activity is not substantial, and company has get its profitability of surplus of 2 crores because of their interest revenue of around 9 crore rupees. So company has received a proceeds of 4.39 crores, as what we have discussed, around 5 crores, and the company has paid off their debt, which is around 39 crores, and it received proceeds from and increased their short-term, long-term borrowings from 19 crores, and that resulted in net payoff of 20 crores, which is a good sign. And the interest payment is huge in last 3 years, which is double than what it was in a year ago. So it is around 25 crores, but that is not really a matter of concern because company is having a cash from operating activity of 40 crores, so they can easily pay off from their operating activities as well. But also that is going to reduce in next quarter or next year because they have substantially reduced their short-term payments. So that would not be an issue, and the profitability will obviously will grow more in next quarter or the next financial year if the balance sheet is available. So looking to the debtor days, so debtor days is obviously reduced because the company has recovered their cash, and the inventory company has piled up some inventory, so the inventory days has increased to 21 days, but the days payable has been reduced to 4 days, which is a good sign, and the company is in line with what they have cash conversion cycle in last 3 or 4 years. And apart from their increment in sales, they try to maintain their cash conversion cycle. Well, that is a good concern because when company is in expansion mode, they try to give more credit to the clients, and that results in their cash lagging of cash receivables. But in this case, even though the company has increased their sales, but the cash increment or the cash conversion cycle remains the same or has been reduced as what it was in the last year. Looking to the working capital days, the working capital days has also been reduced to 52 days. One of the important thing which we consider of the shareholding pattern, so a nano cap or a penny stock like this, which is where the promoter are consistently increasing their stake and reach their peak limit of upper cap limit of 75%. A promoter cannot hold more than 75%, and uh, they have reached that mark, and around 75% of holding is with the promoter, which shows the confidence and kind of which shows the kind of confidence to the retail investors. So looking to the DII and REII are having around 0.05% of stake, that would be a good sign. If we talk about the public shareholders, so public shareholders are having around 24.96%, and there is one substantial holder who is having 1.91%. So it shows that around 22% of shareholding is being held by public shareholders. So a penny stock like this, where the retail investors are having less than, and the majority of the stake is being held by substantial shareholders or promoters. So it shows the company is. It shows the prospects of the company, and this is how the balance sheet should be read to understand what are the things which we have to consider, and accordingly we should do various conclusions upon the company, that whether this company is good for you or not. So the company is dividend paying company, PE is around good, decent enough. Company is having ROCE, ROE of more than 10%. Market cap is around 300 crores. So promoter is having holding of 75%. Company has reached its highest profitability in last 6 years of history. So these all are the factors which we have to consider while investing. And I think that this is not a financial advice. I am not giving any portfolio services. So please consult to your financial advisor before investing into stock markets or any shares. So this is from my side. I hope you find this video informative. Thanks for watching.